Number 4, pay yourself first and then save 10 to 15% off the top and put it into a deposit account at the start of every month. And again, like the first tip about the cash flow, it's about getting into a habit to do this on a monthly basis. Now, if you're starting from 0%, maybe begin with taking 3% off the top and then working your way up to a higher figure. So number 5 relates to investments and savings. So in relation to investments and savings, you have to determine your own personal attitude to investments and savings and your own personal strategy. Now, typically, most people's investment strategies will have 3 strands. So they will have like a secure pot, a growth pot, and then they will have a pot for other assets and investments. Now, the secure pot will essentially be ideally capital guaranteed. It might have a very exciting rate of return, but it will have a very low risk attached to it. The growth pot, potentially a higher rate of return, but also potentially a higher risk. And other assets and investments will be more along the line of your wish list. So, for example, a holiday home. And it is recommended that you would have at least 50% in your secure pot and the other 25% divided up between the growth and the other assets and investments. However, this is just a recommendation. You've got to remember that it's your own investment strategy that matters, so it's whatever works for you. It's important to treat your investments as you would your business. There's quite a few business owners here this evening, and most business owners, well, I would say all business owners, are extremely diligent in relation to maximising profit and cash flow. But sometimes they're not as diligent in relation to their own investments. And this could really be down to lack of time. So essentially, if you have the expertise, then you need to be able to block off adequate time for your investment strategy. If you don't have the expertise, or you don't have the time, then pay for it or move to an area that you're more proficient. This strategy here will have a huge bearing on how quickly you become financially free and how long you remain financially free when you get there. So moving on to number 6. Number 6 is to view tax planning as an ally. It's a personal view, but don't fear paying taxes, just plan for them. Now, I believe if a person's paying tax, well, it will mean that they're generating profits, or they're at least generating some form of income, so celebrate that fact. But what you do need for yourself and your business is ideally a long-term flexible tax plan to take you from where you are now to where you need to get to in the future. And it needs to be flexible, because different things happen to people along their route of life, basically.